US markets had a rotten end to last week, and in turn most other economies followed suit, as is so often the case. And it's all because of what this man had to say. For those of you who don't recognise this handsome badger, this is Jerome Powell. He is the head of the Federal Reserve in the USA, so people tend to follow pretty closely what he has to say. In his 8-minute speech delivered on the 26th of August, he managed to wipe off over £12 billion from the wealth of Jeff Bezos and Elon Musk alone. Poor things, hope they're alright. In a meeting held at a place with one of the most questionable names I've ever heard, Jackson Hole. Honestly, I don't want anything with the word hole in my address, thank you very much. And I used to live in a place called Licky End, for Christ's sake. True story. Here it is. The world's eyes were hotly anticipating this speech because they wanted to understand what are the plans with interest rates moving forward. As inflation continues to soar, the tool in central banks' arsenal to deal with this is interest rates. And they've already made a start on this, raising rates from effective 0 to between 2.25% and 2.5% from March alone. Why? Well, to keep it simple, in order to tackle and curb inflation, they need to alter the balance between supply and demand, and the side that they can manipulate is demand. Raising interest rates will make debts like mortgages and credit cards more expensive and put less disposable income in the pockets of both individuals and businesses. And it will also make saving a more attractive prospect for those with a few quid. This lessens demand and hopefully begins to bring inflation back under control. Don't forget the target for inflation is just 2%, whereas currently we are closer to 9%. What people are frightened of, both in the US and here in the UK, are these higher levels of inflation bedding in and becoming a longer term problem. You've probably got used to your fuel costing closer to £2 a litre now, and your brain almost becomes reprogrammed to these new higher prices. And if you're expecting higher inflation, you will start to act accordingly too, asking your boss for a pay rise to keep up with your ever-growing bills, thus adding to the inflation problem, and we snowball. If this happens, the only way to slam on the brakes is a sudden rise in interest rates, which will almost certainly plunge us into a full-blown recession. That's the cut the foot off to save the leg kind of cure. This entrenched inflation is what everyone is so worried about, and why the world was hotly anticipating what Jerome Powell was going to say at the event at Jackson Hole. Doesn't get any better the more times you say it, does it? So what did he say? I'll leave a link to the text of the whole speech in the description of the video, but here's the highlight reel. He said the bank must continue to raise interest rates to stop inflation from becoming a permanent aspect of the US economy. He went on to say that we should expect further interest rate hikes in the coming months, and they could keep them high for some time. And reducing inflation is likely to require a sustained period of below-trend growth. In a nutshell, they are absolutely 100% committed to getting inflation back under control and closer to this 2% target figure, and that is going to require some further action. Upon hearing this news, US stock markets tumbled around 3% through fears of this leading to a full-blown recession. To be honest, in a lot of ways this surprised me, as this implies that this was some kind of shock bad news. Who was shocked? Not me. The raises to interest rates we've seen so far have made absolutely no difference to the inflation problem, both here in the UK and in the US, even if you take account for the delayed nature of data coming through. And given we are still a million miles away from the target inflation figure of 2%, it's an absolute no-brainer to me that further interest rate rises are on the way. It's a great reminder, isn't it, of how emotionally unstable the stock market is. I would normally suggest to you to completely ignore a knee-jerk one-day set of figures like this. Try not to read too much into it. Only time will tell what the effect on the stock market will be over the next days, weeks and months. I gave up a long time ago making any statements of certainty on the future direction of the stock market or policy changes for that matter, but I honestly think you've got to now expect further interest rate rises if you didn't already before. Futures markets are predicting a rise of 75 basis points in September and then smaller rises thereafter in the US, but we'll see. It's necessary, and the powers that be have confirmed that is what's going to happen. The biggest thing I think you should take away from this speech is that it's clear that getting inflation under control is the Fed's #1 priority, even more so than the economy and its overall growth. So although in an ideal world they'd love both, I think what we've just had confirmed is that they would sacrifice the economy and its overall growth in favour for solving the inflation riddle. Will that push us into a full-blown recession? Maybe, who knows? But I do think that we seem to be headed more and more in that direction, especially with every news article I read, and we are brilliant at talking ourselves into these things. Timing the market is a fool's game, so this makes absolutely no difference to me in terms of my strategy of continuing to invest. I shall just bite down, ignore the noise, and carry on regardless. Remember, the stock market is a device to transfer money from the impatient to the patient.